Let's see what's happening. Hey everyone, it's Joe Bladek for another episode of Canadian Mortgage Weekly, Canada's only weekly video mortgage news podcast, right here broadcasting from Orillia, Ontario. So join me today as we go over what the government's going to decide on the stress test today. They're meeting today to review it. The stress test has been a big challenge for a lot of potential homeowners. A lot of homeowners have felt that the stress test has put them in a disadvantage, because it's really limiting the borrowing power a lot of home buyers have. I did some calculations actually, and the calculations show that if an average Canadian family goes to apply for a mortgage, once the stress test gets applied, you can have a reduction in the amount of mortgage that you would be approved for by approximately $100,000. Sometimes a little less, sometimes a little more, depending on where you're at with the original approval. But that's about the average change that you would see on a mortgage approval in Canada. So that is quite dramatic. It's absolutely crazy how much of an impact the Canadian stress test makes on the average homeowner's mortgage. And what's really interesting is that as people now are getting to their renewals and they're seeing that the renewals are coming in higher, they're coming to people like mortgage brokers and banks to refinance, to see what their options are, to see exactly what possibilities they have. And these banks are turning these people away, saying, sorry, we can't do anything on your mortgage because the stress test makes it so you don't even qualify for your current mortgage based on the higher rates. So they're forced to take the renewal rate with the renewal payment, sometimes being hundreds of dollars higher. So let's take a look at the stress test today. I'll have an announcement for us at the end of the episode today on what the government's deciding to do with the stress test. So if the stress test, let's take a look at some of the changes that might happen if the government meets today and decides, you know what, we're taking away the stress test. Once the stress test is taken away, whatever date that takes effect, we would see an automatic increase in borrowing power to every single Canadian out there. It would be, if they eliminate it altogether, the stress test, then the elimination of the stress test will increase borrowing power for all Canadians by about $100,000. It would be more the lower income you are. The higher income, it doesn't really matter too much, but that's based on the average Canadian. So that is quite a monster of an amount. And I would really love to see the government definitely tweak the stress test at least, because we're seeing a lot of Canadians, a lot of homeowners, as I mentioned, come for refinances, trying to do something with the renewals right now. And they don't even qualify for the mortgages they have currently because the rates have gone up so much. So what do you guys think? I would love to hear what your thoughts are about the stress test. Should the government eliminate it? Should the government keep it? Is it a good thing for the economy? Is it a good thing for the housing market to actually keep that stress test around to be able to limit the borrowing power of Canadian homeowners and potential homeowners? So let's get on with the rest of the presentation. I'll talk about how the stress test is affected. And at the end of this episode, I'll have an update for you as to what the government decided to do about the stress test. So as I mentioned, today we do have that stress test update. The mortgage stress test update will be happening today. The government is meeting on December the 15th, 2022. It's their annual review of the mortgage stress test. So that will happen today. I'll have an update for you by the end of the episode. I'm anticipating that by the end of the episode, we will have an answer as to what the government's decided to do with the mortgage stress test. And as mentioned, the borrowing power, if eliminated, will jump by $100,000 for every single Canadian, depending on your income, but it's the average by $100,000 for annual income. So let's take a look at the 5-year bond yield first of all. I track this here on Canadian Mortgage Weekly every single week. And as I track this bond yield, what I'm doing with this metric is to help forecast and help you all understand where fixed rates are headed. Canadian 5-year fixed rates specifically, as it shows here is the 5-year Canadian bond yield. And when the 5-year Canadian bond yield goes up, then as you see here, interest rates did go up. And this is right up until October. October 20th is this peak right here. And since October 20th, we've had a rate increase announcement by the Bank of Canada on October 28th, 2022 of 50 basis points, and another rate increase announcement on December the 7th, 2022 by the Bank of Canada of 50 basis points. But the bond yield has been dropping. And what I have noticed since the bond yield has been dropping in Canada is that the 5-year fixed rates have been coming down. So anyone that's been pre-approved for a mortgage has been having their pre-approvals come back to me. Oh, you have a lower rate. Oh, there's a lower rate. Oh, now there's a lower rate. And there's a lower rate. And there's another lower rate. Because 5-year fixed rates track the 5-year Canadian bond yield. I'm not sure how low this bond yield will go. Here is August. This point here where my mouse clicker is. August 2022, we had a low point in the Canadian bond yield where we did see 5-year fixed rates drop to annual lows, which was pretty amazing. So anyone that did get their pre-approval in August was able to get a much better rate than anyone in September. So if you're tracking this and you want to make a home purchase or a decision with your refinance, understand that the 5-year Canadian bond yields can help you by giving you an idea of if it's a good time to apply for that pre-approval and get that mortgage rate set. Because once your pre-approval is in there, your mortgage payment and rate will not go up. It's protected for 120 days. So that's really something to consider. It's a good option. What do you guys think? Do you think the bond yield and the 5-year fixed rates will keep going down? We'll be interested to hear your comments here on Canadian Mortgage Weekly, Canada's only weekly video mortgage news podcast. All right, so the Canadian inflation rate numbers for November are not out yet. I'm anticipating they'll be out later this week or early next week. A few days away here. However, the inflation for October did remain at 6.9%. That's quite a high rate of inflation. And the inflation numbers did peak in June at 8.1% here. So whether or not we will have a decrease in inflation remains to be seen. But our inflation numbers are on par with what about April of 2022 was. So still pretty high inflation at 6.9%. But looking forward to seeing the inflation rate come down. If the inflation rate does come down for November, that will be a good indicator that the Bank of Canada's rate increases are working. Their mandate is to get inflation back down to 2%. Let's take a look at what's happening in the United States inflation. Now, we did see that the numbers for the United States did come out just this week. 7.1%, the lowest inflation that we've seen in the United States since 2021. So all year, that's the lowest inflation we've seen in the United States, which is pretty amazing. And the Bank of the United States, which is the Federal Reserve, has been increasing rates. So that has been working to tame this inflation number. What do you guys think? Do you think inflation in Canada will come down the same way it went down in the United States? In the United States, we saw a 0.6 decrease in the inflation number. If it dropped by 0.6 in Canada, we would see an inflation rate of 6.3%. Let's see. Will we have an inflation rate of 6.3%? It remains to be seen. Let's take a look at the CDOR rate. The CDOR rate is something that I use here on Canadian Mortgage Weekly to price out variable rate mortgages and whether or not they are a good deal. So as you see here, the CDOR rate has dropped off just slightly. It's been going up since January quite considerably. However, we've seen this flatlining recently in the last few weeks as we've been tracking the CDOR rate. So as I said, there was a flat off here. a little bit of a peak here. The increase of the CDOR rate has been tamed quite a bit. So we have it going up pretty strongly between April and July, extremely strongly in August, then tapers off a little bit September, October, peaks at the mid-October, November decreases, the increases, and now we're seeing almost a little bit of a decline right now the last couple of weeks. So we'll see what happens with the CDOR rate going forward. But right now the CDOR rate is telling us that the fixed rate is lower than the variable rate. And the fixed rate is something to consider right now, depending on your home ownership goals. A lot of people still take variable rates. Don't be confused. And people are taking variable rates for a number of reasons. Number one, they want to maintain flexibility with their mortgage. They don't know if they will refinance in the next 5 years or move in the next 5 years. Also, the same people that are taking variable rate mortgages right now are those that don't want to lock in for the 5-year period and pay that static amount because they believe that there will be savings in the next 5 years to be had. So they're okay with paying the higher interest rate for 2022, 2023, knowing that 24, 25, and 26 will be years where the interest rates do come back down. What are your thoughts? Do you think that's going to happen? Or are folks that are taking the 5-year fixed right now putting themselves in a more secure position? Perhaps the 5-year fixed rate is a better option because perhaps rates will continue to go up for 23, 24, 25, and 26. It's a bet. However, it's all dependent on your homeownership goals and your homeownership plan. Please do take a moment and schedule an appointment with me in the video description below to go over your homeownership plan and see if fixed or variable is right for you. All right, let's take a look at what's happening with the Bank of Canada and the latest news out of there. All right, so we have the overnight rate sitting at 4.25%. The overnight rate in the Bank of Canada sat at 0.25% during COVID. Now it's up dramatically since then. Also, the last announcement, which was December the 7th of 2022, increased the overnight rate by 50 basis points. And the next Bank of Canada rate announcement is happening on January 25th, 2023 at 10 a.m. Join Joe Bladek right here on Canadian Mortgage Weekly on January 25th at 9:45 a.m. as I go through some of the news and some of the events that will bring us to that rate announcement. And then at 10 a.m. we will do a live release of the rate announcement on January 25th. A lot of people are speculating that December the 7th, 2022 was the last rate increase going forward. A lot of people are speculating that the Bank of Canada will now take a backseat approach to watching what happens with the aggressive rate increases that we've seen in 2022 to find out how it will affect inflation going forward. There are a few financial broadcasts that I've watched showing me that with where inflation's been and with the aggressive stance the Bank of Canada has taken, that we might see a period of disinflation for the next few months. And if it's too aggressive, a lot of people in the financial industry are concerned that we may see deflation. Now, that's not necessarily a bad thing for a lot of people, but it is a bad thing still for quite a bit of businesses and quite a bit of employers and some people as well. What are your thoughts? Do you think the Bank of Canada will increase rates on January 25th? Leave a comment below. I'd love to hear what your perspective is. And if they will increase rates, how much will they increase them on January 25th? All right, the average national house price. What is happening with the average national house price in Canada? Well, we've seen the average national house price take a deep dive since February of 2022. We did have It peaked just over $800,000 in February of 2022, which was right here at this red peak. The red indicates price. The blue indicates transactions. Benchmark. So the red does indicate the price did peak in February of 22. In August, we saw our first twist. We saw our trend reversal where in August, we saw an increase in the average national house price of 1.5%. How amazing is that? So after so many months of just coming down, February, March, April, May, June, July, 6 months of decreasing home prices, we saw the home price reverse. And then in September, we saw an increase of 0.44%. And then in October, we saw an increase of 0.65%. What are your thoughts? Do you think the Canadian national average house price will continue going up in November? We should have those figures next week, and I'm happy to bring them to you all on Canadian Mortgage Weekly, Canada's only video mortgage weekly news podcast. And I'm looking forward to releasing those numbers right here to all of you. In terms of who is buying houses right now, a lot of people who are buying houses right now are not the first-time home buyers. First-time home buyers think it's not the bottom. Second-time home buyers, they don't want to buy a house right now. They don't think it's the bottom. And because they don't think it's the bottom, they also think that interest rates are too high. The people that are buying houses are investors and folks that are happening to take variable rate mortgages. It's a very interesting conundrum. Those who are buying houses right now know that we had a bottoming out in the market in August. They were going in right away, getting a variable rate mortgage. The reasoning being they want to take the variable rate mortgage, they want to buy low, and they want to set themselves up for success in 2023 by buying a home at the lowest possible price and waiting for those rates to decrease so their payment will decrease in 2023. What do you guys think? Is that a ridiculous assumption? Can we assume that that will happen? I'm interested to know your thoughts, because these investors that did buy in August and September with a variable rate could end up much ahead of anyone who buys next year at a higher price with a lower interest rate. Thoughts? Let me know in your comments below. All right, so that's episode 113. Today we are looking at the mortgage stress test update. So what's happening with the mortgage stress test? Well, the Bank of Canada is not the one that's looking at the mortgage stress test. It's OFSI. OFSI is an arm of the government. It's the Office of Financial Superintendent, and they're looking at what the stress test is doing. And right now it is helping Canadians stay in a situation where they're limiting their borrowing power, and it's keeping things very conservative. And the government and OFSI's decision this morning was that they are keeping the stress test where it is. They're not tweaking it. They're keeping it where it is going forward. It's an interesting because I think that the stress test has done its job. But with them keeping it where it's at, it almost seems like they believe that interest rates might continue to go up. What are your thoughts? I would love to know what the stress test has done for you, and if it's serving you well. And if it hasn't served you well, do you think the government should get rid of it? Interested to know your thoughts here on Canadian Mortgage Weekly, Canada's only weekly video mortgage news podcast. Again, my name is Joe Bladek, and if you're looking to get mortgage advice or talk to a mortgage professional, I do meetings over Zoom, Skype, text, email, phone. If you live in Barrie or Orillia, I can meet with you in person and talk to you about your mortgage that way. A lot of my clients are first-time, second-time buyers, investors, people that are refinancing, and those who are taking second mortgages as well. If you're looking for any one of those products, or perhaps a home equity line of credit right now, give me a shout. My name is Joe Bladek. There is an appointment in the video description below where you can set up an appointment in my calendar in any way you decide to do. So this is another episode of Canadian Mortgage Weekly. Join me next week here for another episode. We'll be going into some new